Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. Well, it looks like the market may be pulling back once more. I mean, golly, it does look like we may be looking at another leg down here. I don't know exactly if that's going to be the case, but interesting thing happened. The Europeans pushed their interest rates up by 0.5%, and of course um, that caused a little bit of a market drop initially early in the day, and then it kind of recovered after that. It's still just really volatile out there. Just tough market to trade in general. I did put a little bit more stuff in there. I don't know if that's good or if that's bad, but I did buy some NVIDIA today. Basically one full position of NVIDIA, and it was initially doing good, and then pulled back a little bit. It did finish the day up, but golly, not necessarily the greatest. Not the easiest, greatest market to trade, but basically we're up on everything except for CRISPR, and CRISPR is down almost 3%. So we're still in it. We're still in it. Basically, this is sort of how this is a snapshot right before the end. We were down on most things, and then of course it flips. So go figure. It's a very tough market to trade right now. Just not that forgiving. And probably one of the best bets would have been to just stay and do nothing. Let's take a look at the spider, see how that ended up today, and see if we can glean any good information out of that. Again, it's just a tough market to trade out there, and this is what the spider looked like. It did move up today, but then it's pulling back after hours. So go figure. I do think we're probably going to get another leg down here. It has moved above the 50-day moving average, but it is looking like that might not be the end all be all there. So let's just get into some questions real quick, and no comments yet, but let's take some TikTok questions here as we go. And I have a little bit of an issue there. A lot of people joining. All right. Well, let's just kind of go through it and see kind of what was working today, what was not working. I'm first going to go to NVIDIA, and this is one that I did buy today, and just kind of seeing how it's looking in the after hours. It's just pulled back quite a bit in the after hours. Really kind of puzzling here, but we were up nicely. Today we're up about 1.3%, but in the after hours it's pulled back almost the same amount. So basically I got in about 178.80, and in after hours it's 177. So it's down a little bit. Not exactly not exactly what I want to report there, but hey, it's just a tough market to trade. Samuel says, "Hey, so confused in the market. Another leg down. Should I hold or cut the losses from the bear trade?" I think there's going to be another leg down. That's what I'm looking at. Can't tell you exactly, but that's kind of what I'm looking at seeing. I'm seeing some movement down there, unfortunately. So, gosh, just really tough stuff. Okay, question from Netflix, and this is Bossy 02116, is that right? And this is about shorting Netflix. I think it's really too late to short Netflix. I did have a bear put spread on this one, and I did get out of it only because I think that it is probably going to kind of move a little bit higher. I mean, I hear that by the end of the year it's going to be ads. I think their growth is slowing. As a matter of fact, I know it is. And people are just going to cut back. I just think people are just going to cut back here. So, not really the easiest thing to do. But on Netflix, I wouldn't short this one because of all this volume that's coming in here. I would just be really, really careful on it. I would just be really careful. I don't think you can go long on it either, which makes it super tough. Which makes it super tough out there. I don't think you can go long on it either. So let's see if I can invite somebody to come on. Let's see if we can do that. That would be very cool. I want to try this. I want to and try this, but see if we can do this. And see if Lisa would be interested. Let's see. I'm gonna. Should anyone want to come on? And I'm just going to throw it out there for everybody. All you have to do is click this. If you get this message, all you have to do is click this link. So there we go. If anybody wants to come on the show and, to kind of make it more interactive than me just yammering on here. Let's go to Tesla and see what's going on there. And it did have a nice move up today. Very nice move up today. But the question is it buyable? Well, I'm still holding out here, and I'm not necessarily doing anything yet, because I really think that the level that Tesla has to move to is this $900 level here, and I'm going to draw a line across it. That's almost exactly where the 200-day moving average is. That I really have to see it kind of move above there and hold there before I think we're moving back up. One of the things that did happen that was very interesting out there, of course, is that Elon Musk sold 75. Well, I don't know if it was Elon or the board, but they sold 75% of their Bitcoin holdings. So that just tells you, that just kind of tells you what's happening there. It's real weird. But that just kind of tells you what's going on in the market. Just a real treacherous market to trade. Let's take a look at some of the other ones that I've been looking at. The one I do like is CRISPR, but it's pulled back, and I want to take a look at the chart. CRSP is the symbol for CRISPR Technologies. I do think, hopefully I didn't cut this one totally wrong, but let's see. Can't pass comments to some day should learn more. Okay, new comments. Okay. Oh, there's people that want to join. Oh, cool. I put that out there. By the way, if you're on YouTube and you want to you're interested in coming on, you can just click that link and come on the show. That would be very cool, if indeed that was the case. So I don't know if that's the case. Nope. Nobody's took me up on the offer. Oh, that's okay. That's okay. All right. With Tesla, I just think you got to hold your horses on it. Just not doing much. CRISPR, I think we're still in this upward trend. Hopefully, I'm right about this one. It is off a little bit after hours. Tough one to figure out. I do think this one is looking good. I think this is being accumulated, but we'll see what's going on there with that one. What does a put on Tesla mean? That's a good question. What a put means, what a put is that a put is a contract. It's an options contract that each contract equals 100 shares that allows you, if you sell somebody a put, then you're giving them the right to put the 100 shares to you at a certain price, and that's the strike price. So when you buy a put, that's allowing you to potentially sell at a specific price those 100 shares to that other person. So when you put something on Tesla, that means that you are buying a contract that allows you to sell at a certain price on or before the expiration date. So typically when a stock is moving down and you want to take advantage of that movement, that's when you're going to be buying a put. Now, I typically don't buy naked puts, and that's just having one put. I typically will buy an upper put and sell a lower put, and that is a spread. That's called a spread, so that I limit my potential losses. Because if you do sell a put, if you do buy a put, well, it can expire worthless if it goes above the strike price. But but sometimes I want to protect that a little bit, and so I'll also sell one at the same time. You should definitely Google it a little bit, but it's a way of taking advantage of some downward motion on a stock, and that's called buying a put. All right, TH. Thank you for Matt. Let's take a look at this one, TH, and see anything out there. Wow, look at that Target Hospitality Group. Wow, this is specialty rental accommodations with catering. That's very cool. I don't know this company at all. $12.25 in the after-hour trading here. Boy, this just came out of nowhere. I don't know. I couldn't tell you why this is, but look at that. That is really something. This looks like it may be forming a high-tide flag, which would really be interesting, really interesting here. That's kind of the flag there. You can see that. Now, I'm not saying this is a high-tide flag because there's a little bit of things about it kind of looking like this could be doing something. Look at that, 99 relative strength. I wonder what's going on here. I don't know this company at all. It's got a good checklist. It's got 89% on that checklist, so that's a pretty good checklist. Could you buy this thing? Wow, I don't know. Let's go over here. I just want to kind of check out some of the fundamental things. And by the way, what fundamental analysis means is it's what you learned in business school. It's it's the profits and all that kind of stuff. The charts themselves are technical. This down here is fundamental. This is the sales and the profits. Well, definitely look at this. Look at the sales have definitely gone up each quarter. And by the way, William O'Neill once said that if you want to find a winner, find a stock that's gone up 20% in sales every quarter for about 2 years, and then you're going to be in a very, very rarefied group. And definitely, this is really interesting. Now, the 1, 2, 3, 4. This is the fourth. This is the fourth quarter that they've had more than 20% growth. Before that, they were pulling back. So, what is going on here? I don't quite know what this is. The price to earnings ratio 124. That's a little bit high. But it has strong cash flow. So what is going on here? I can't tell you enough on this one, but I am seeing some things like a lot of accumulation going on in there because this little Easter egg means that it's the most volume since the last pivot, and that's the last pivot right there. So this went from 5 to 12. That's an awesome return. Will it do it again? I don't know. I don't know about that. Couldn't say. So I'm really up in the air on this one. All I can say for this one, very interesting, but I just have to say I don't know about this one because I really don't know anything about this the stock. So I just have to say question mark. I don't know. But it's a very interesting chart. Would I buy it? Probably. I want to find out more information on it. I just don't know enough about it to say anything. What stock you're looking at? Well, I was looking at a stock called Target Hospitality Corp, TM. By the way, if you want to see the charts and everything, just go to my profile up here. I'm just pointing up there, and click on the link, and you'll be able to get directly to it. So you'll be able to see all that stuff. So that's good. All right. So let's take a look. Is it a good idea to short Tesla? Boy, I don't think so. I think it's the best idea to figure out what is the trend on Tesla. You see, that's the thing. I'm pretty much of a trend trader. I want to see a trend and then get in. Picking them off the bottom that's very hard for me. But putting it in on a finding the first thing I want to do is find the trend, and then if I found the trend, then I decide whether to go long or short on it. Right now with Tesla, and let's pull that up here. Right now with Tesla, we are sort of we had a downward trend, then sort of went sideways, and this is definitely sideways. And now the question is, are we moving into a upward trend? Well, the trend line would definitely say that, because we are, we have had one day, and this is really the danger here, of course, is that we've had one day of an upward trend with Tesla. I'm going to put the trend line back in here, and this is basically going from here and showing it. Is it moving to the upside? Well, here's the thing. I think you got to be careful here. I mean, I think you could get a pullback, but this is not really an ideal place to short Tesla. So here's the thing. I would be very careful, and I would not. I wouldn't at this point. At this point, I would not not short Tesla. And part of the reason, of course, is that in these downward trends, and the overall trend of the market is downward, but they get these nasty rallies, and I think we were just in a rally. So it's one of those things. I just wouldn't short Tesla here. I just wouldn't short it, because I definitely think it could reverse and go higher. It definitely is trying to make an effort doing that, but it hasn't really determined if it's going up or, it's sort of still going sideways, believe it or not. And so I would be very careful. And so I would just kind of I put this on the watch list, but I probably would not be a buyer of this, just because there's not enough evidence that it's going to, there's not enough evidence that it's going to retreat, at least not yet. So I think you just got to watch it. It's painful, but that's kind of what you got to do. Let's look for Finance Fund. I like that name. PFE. This is Pfizer, or as Jim Cramer calls it, Fizzy. PFE. Don't always. It's a good idea to take some of what he says with a grain of salt, because I think he works for the drug companies to promote their stock. But I don't know. That's maybe not true. Pfizer, again, we're sort of a flat pattern. We've pulled back to that 200-day line. The question is it buyable here? I would say no, and the reason is because it needs to reverse above that line. So what I'm going to do here is I'm going to note that. Oops, if it'll let me do that. There we go. I'm going to set an alert, but I'm going to set an alert on that line. There we go. I'm going to set an alert on that line, and what that does is if it starts to move upwards, then I'll get an alert on it, and we can take a look to see if it's ready. It looks like it's kind of settling on that 200-day line, and it could go higher, but right now I just wouldn't do anything. I would hold, and I would watch this, and I'd wait, and I would basically here, I would basically wait for a reversal. A reversal. I would wait for a reversal higher. That's kind of what I would do here. I would wait for a reversal higher off of the 200-day moving average. That's kind of what I would do right there. And that's sort of where I would look to possibly get into it. All right. So that's Pfizer. Samuel again. The main issue with Netflix was account sharing, but now they fixed it, which is a good thing. Well, actually, the main problem with Netflix, it's true, account sharing is one of their problems, but their other problem is revenue. They're not making enough revenue. That's why they're going to go to a where they're going to show they're going to show commercials. And so remember when, you're probably not old enough to remember this, but I kind of remember this. I remember when cable television first came out and there were no commercials on some of the channels. Well, that changed. And I think that's changing for Netflix. So I see it going the way of cable television, except it's wireless. I mean, that's when I see it going. So, and there's going to be a million, there's Disney Plus, there's all this kind of stuff. So what's going to win probably in the streaming wars are going to be things that have ads on them, like Pandora and Crackle and those kind of things. Those are going to win, I think, because people just aren't. We're going into a recession, and maybe even worse than that. I hope not, but but it's not looking good for the economy. I mean, AT&T was down because people are not being able to pay their phone bills. So that tells you something. So that's why they're all going. That's why they're rushing over to that ad model. So I just think that Netflix is just not. I don't think it's that good right now. Unfortunately, I'm kind of sour on the. I'm kind of sour on the economy a little bit, and I hate to be. I don't like to be sour at anything, but I see a lot of trouble ahead. All right, Matt is looking at ECPG. Let's take a look at it. ECPG. And that's his Encore Capital Group. And what do? They collect unsecured consumer debt and receivables. It's the debt collectors. Actually, this is probably a good area of the market to be in because just as I was talking about AT&T and people not paying their bills, well, the debt collector business is always good in a recession. I can remember, here we are. Here we are in the Wayback Machine with Jim Malone. You probably don't want to hear it, but I had a business in Monterey, California. Beautiful, beautiful place, by the way. Highly recommend it. But we were on kind of a hard times, and there was a company that I dealt with that went out of business, and they, it was an appliance store, and they would sell new appliances to people on credit. Monterey's not a very big place, and it's kind of isolated, so it's kind of like it's kind of like that. So they turned the company into a debt collection agency because so many people owe the money, and they did very, very well. So I think, long story short, debt collection in a recession, and we are in one, is probably a very, very good business. I mean, I know that's a little bit gruesome, but I think it probably is a very good business. The relative strength line is certainly talking volumes there. It says financial services specialty. Well, these are really just debt collectors, and I bet you they're probably been doing pretty good. I don't know if I'd want to pay $69 for one, because I think there's a lot of other ones out there. I mean, I don't know if I'd be running to buy this stock. Their sales are definitely up. That's no surprise. But the profits, then this is, the way it works in debt collection, of course, is that they get a percentage of the profits. That's all up. They've got a very low price to earnings ratio, so they're actually earning quite a bit of money, and they have a strong cash flow. So this one might be one that's good. I mean, I don't know about the stock, but the dividends are probably going to be very good on this. Are probably going to be very good, and very, very low price to earnings ratio. I'm not saying that you should always buy low PE ratio companies, but debt collection in a recession is good. So I would say I'd be cautious on this one. I don't know if I would start a position on this one. Maybe a quarter position you might want to go on this one. I do think it's probably going to move up, though. This is a very good countercyclical business, and I probably wouldn't buy it, but because it's sort of not my style. I want to see something with a little bit more flash on this, but. In a recession, this is probably going to be a good business. So I really appreciate you bringing this up. I'm gonna mark it down here. It's ECPG for everyone out there. ECPG, and Empire Capital Group Incorporated, and they're a debt collectors. So interesting. All right, let's get to one that I'm more interested in, and this is Occidental Petroleum, Oxy, OXY. And Oxy, of course, as you know, is a big Warren Buffett one. Now, interestingly enough, when oil, you remember last year, remember in the Trump administration when oil went to zero, and they had too much of it in Cushing, Oklahoma. You probably, it's hard to imagine that was only 2 years ago, but 2 years ago, basically oil went to zero, and Occidental Petroleum had all these leases in the Permian Basin where we produce, in this country at least, the U.S., most of the oil. And they had a little bit of a cash flow squeeze, and I can't remember the name of the woman who was the CEO. She had to she had to get a loan. Nobody wanted to lend to them because of ESG, and that's a whole other thing. So she went to she went to she went to Daddy Warbucks, and Daddy Warbucks loaned Oxy a lot of money at 13.5%. I wish I could do that. And then eventually, started to convert it back into debt. So they're now a big holder. Could you buy this here? Well, Warren Buffett certainly likes this company. I think that long term, it's probably really good. I mean, the thing is, with ESG and everything like that, there's a real underinvestment in the oil sector. Now, the oil sector is tough to play. I mean, I'll be honest with you. The oil sector is really tough to play because, the government basically, and I don't know why this is the case, but the government in Washington, they really don't want the oil companies at all. They really wish they would go away and everybody would have a windmill in their backyard. But the problem is most people don't have backyards. They're homeless. So they would really wish they rather do that. But these oil companies, they're going to be around. The problem is, people aren't there's not investing enough capital in them, but and that's not good. But Oxy looks pretty darn good. Now at this juncture, would I buy it? Well, I think I'd wait for an uptrend. Currently, it's not in an uptrend, but if we go to the weekly chart, and that's really the one you really kind of want to look for, it's starting to consolidate, and we have this buy point. So, we're starting to get this very nice movement up. We came all the way down. We got some support, and we're moving up higher. My only concern about buying Oxy at this point is the fact that we are still under the 50-day moving average, but we're getting to the point where we're seeing some support there. If it can keep support at the 50-day moving average, then I think you might have a buy, because 7 out of 9, that's looking good. And on the technicals, we are basically right at the 50-day moving average, which is 62 and 62.50 really, right there. So the question is, it needs to go above the 50-day line. If it can hold that for about 2 or 3 days, maybe a week, then I would be a buyer, because I think this is good. This is a tough market to buy in, but I do like Occidental. It's pulled back. I think the even with the price of oil going down, I think that the cash flow is there, and this is a good company in a good industry that's that's undercapitalized. That's the only way. That's the only way you can say it. James, what do you think about the SPY? Is it time to short or wait for the leg down? Boy, I wish I had a crystal ball on this one. I do think it's moving lower. As if you've watched me for any amount of time, I think the spider's going down to 320. Now I know that's a little bit grim here, because right now we're at 397, but I do think if we go, and let's go over to the weekly chart here, I do think we're going to see, we had this leg down, we rallied, another leg down, rally, another leg down, rally, and I think as we come up to the 21-day line, I think that it's pointing downwards. So we will see how it looks, but I'm looking at another leg down. What I'm going to be doing probably is I'm going to be pushing my stop losses up on all the stuff that I own tonight, and I have a feeling that tomorrow we're going to see some more destruction in the S&P type stocks. I think we are, and I think the shorts that I have are going to do better. It's really a mixed bag, because it's just really a mixed bag. So I probably wouldn't short here on the spider. I just don't think it's a good place to short. I just think there's nothing you can really do. I think you just kind of have to look from the sidelines. I think you got to look from the sidelines. So that's kind of what the deal is. Oh boy, just not easy at all to look at there. Yeah, not an easy deal. All right, is it a call spread on the QQQ? Well, sort of the same. Unfortunately, I'm totally non-committal. I've been so non-committal about everything. On the other hand, I would like to buy some of the stocks that are in the QQQ. It was up nicely today. It's this week. If we look at it, this is a nice move here. But do I expect this thing to pull back? Well, this is bottom fishing here, basically. Now, I tried to bottom fish, and and this is not my style. I'm typically a can slim trader. I'm always looking for a trend to jump on. Bottom fishing is a little bit different, much different kind of deal. There is a lot of people are bottom fishing, especially in the techs. That's why the QQQ is going up. But, do I think it will continue? Well, maybe. There's a lot of bottom fishing going on. But I don't know if I'd want to buy calls on this. I think what I would do instead on the Qs is I would just buy the Qs. I probably wouldn't even buy a call, and I just buy a few shares of the Qs. I know that's very, very weenie and non-committal, but I do think it is moving higher, at least for probably another few days. But it's just very, very hard. So my gut feeling is no. I probably would not. I probably wouldn't buy a call spread on the Qs. That's my yeah. I just don't think so, unfortunately. ELF extended, still viable or a pullback? Let's look at that. That's another one for ELF. And let's see. Yeah, this is interesting. I don't know. I was hearing them talk about. They were talking about this, by the way, on IBD Live today, which is actually kind of a good show if you want to tune in. Unfortunately, it isn't a subscription show, but they were talking about this today. I know nothing about this area of cosmetics, as you can tell, because I have a face for radio. I don't have a face for television. Maybe I need to get some of their products, but these personal care cosmetic products, I'm a little bit concerned, though. I mean, I know this chart looks good, but this just isn't an area that is being invested in by the funds, and I'm a little bit concerned. I mean, cosmetics, personal care, 118 out of 197. I mean, even though this chart does look good, I just think this could pull back. I think this could pull back. I don't know what's driving this stock because, I guess, in recessions, cosmetic companies typically do well, but I don't know. I would stay on the sidelines on this one. I just couldn't say a lot. Tilray in the marijuana stocks. The reason the marijuana stocks have been moving, of course, has been that the bill that they're going to announce that they're going to put in the House, the Congress is going to go for a bill to decriminalize marijuana. I wish that they would spend their time on things that actually mattered a lot more than that. But hey, hope springs eternal. I mean, I wish they would concentrate on energy independence and not getting into a war. But hey, let's let's legalize marijuana. like we needed that. If you want to see, I mean, I'm originally from California, and I am a little bit biased. But if you want to see what happens when you do that, just go to Venice Beach. Just go down there. It's legal there pretty much, and it's got a huge population of zombies. I'm now in Texas because of that. I mean, anyways. So is Tilray going to move up? Well, it's a $3 stock. I mean, would I buy this thing? No. I can't get excited about it because look at this. It's just diving into could it be a $2 stock? You betcha it could. You betcha it could. So would I be buying? The thing about Tilray is Tilray is moving. The only problem is it's moving down. So TLRY is moving down. So, yeah, I mean, Tilray definitely is moving, but not in the right direction. So I wouldn't be a buyer of Tilray. Yeah. Is it a good time? Is it a good time for investment? No, it's a bad time for investment right now. One of the best investments is cash. I hate to tell you that. That's very Great question from Jay on what is bottom fishing. Well, it's a style of investing, and it does work. Basically, what you do is you look for hopefully the best companies that are like the most beaten down, and then when they turn, that's where you buy them. Now, the only problem with this is sometimes you can get a home run. I've seen people looking to buy quality companies like Microsoft doing this, and but for instance, buying Tilray, for instance, would be bottom fishing. That would be bottom fishing because Tilray. Let's go back to Tilray. Tilray has um, TLRY has basically done nothing but lose money since its inception. So we'll go over to the weekly chart here, and I kind of want to show you this beauty. So what I mean by bottom fishing is this is the chart of Tilray, the weekly chart. So let's put this on a graph here, and Tilray, if we look at it, so if you invested in Tilray a year ago, for every dollar that you invested in Tilray, you would now have 25 cents. Now, if on the other hand, you said, well, that Tilray, I don't know about that. Let's let's invest in Tilray and let's invest in Dollar Tree, DLTR. This is the discount retailer. So if you invested in Tilray, this is what you would have got. For every dollar you invested, you could have about 28 cents. And for Dollar Tree, you would have had about 175 cents. So you would have been making about 75% on your money if you last year invested in Dollar Tree, a discount chain. That's what you would have done. Well, what is meant by a bottom fishing is that you can see now this is almost at the bottom here. Okay, it's about worth about a quarter. For every dollar, it's worth about a quarter. So this is it looks like it's bottoming here. So if you were really brave, you would buy Tilray because thinking that, oh, well, it's going to go back up to its former level. But a lot of times what will happen is that it'll just go like that. And it'll just go down even further. So that's bottom fishing. And the reason I don't like doing it is because I can never figure out where the bottom is. That's my problem. Did I buy the bottom, or did I buy sometimes you don't buy the bottom. It just continues to go down. So, wow. Or should I wait until the market's stem? Yes, I think it's a good time to wait. And waiting, believe me, is the hardest thing to do in investing. I've been mostly in cash. I came out a little bit, I'm short and in cash, and then I came out a little bit, and it looks like I'm even being punished for that. So probably a good time to be in cash. Twilio. Let's look at Twilio. Twilio is another one of these ones that we might be a good bottom fisher. TWLO. I think that's the symbol for Twilio. Yes, Twilio. All right, let's look at Twilio and kind of what's going on. Well, it looks like it has completely round tripped. If we bought it in March of 2000, you would have basically been about the same place you are now. So basically for 2.5 years, you loaned the money to this company. So not a great thing. Let's sort of put that on the list. Now, this, of course, is a technology company. Now, not all technology companies are created equal. So for the year, Twilio has been in this downward trend. Is it moving up? I don't think so. It looks like it's just moving down. Now, if instead you took a more conservative approach and you invested in, well, let's say NVIDIA, because NVIDIA is the leader, it's in the chip space, how would you have done? Well, you still would have lost money in NVIDIA. You would have lost about $5. But you would have lost $75 if you'd been in Twilio. Now, if you had gone with it completely out of the tech area altogether, and you had bought, let's say, ExxonMobil, XOM, you would have done pretty darn well with ExxonMobil, because if you did this a year ago, so this is starting basically at a year ago. This is showing how the oils are outperforming. Now, question is, where do you look for these opportunities? Well, one of the places that you look for these opportunities is in the it's in the the heat map. So let's put up the heat map here. See if I can get that up here. And take me a second. And this is going to show you where in the market the strength is, and that's so important because we're in a situation where we really want to be, if we're going to be investing at all, we want to be in the stronger areas of the market, the areas of the market that are doing the best in terms of the rest of the market. And that basically, and let's put this up here. That's this sheet here. By the way, we do have I'm going to make this available to everybody, but let's see. So if we go to the parts of the market that are doing the best currently, the best part of the market is the Oil and Gas Royalty Trust. The only problem with the Oil and Gas Royalty Trust is there's just not a whole lot of stocks in that are really, really good, but there are some. So if we're looking for an area of the market to kind of concentrate our looking, that would be in the oil and gas royalty. Let's pull it all the way up. The Oil and Gas Royalty Trust. So most of these are oil and gas here. Now, why? But if we come down here, 1, 2, 3, 4, 5, this one is starting to really improve, and this is the medical wholesale drug supplier. And this area has been very good. This is McKesson. So if, for instance, we were to look at potentially, if we're going to look at a potential investment and compare them with what we've got, the Twilios of the world, the NVIDIAs of the world, and the ExxonMobils of the world, and we were to put in McKesson, MCK, and this is in one of the best groups, we would see that for most of the time since a year ago, this one was basically performing about the same level as ExxonMobil. But currently, McKesson, MCK, is starting to even outperform the oil giant Exxon. So what I'm trying to say here is that this might, if we're looking to put a toe in the water. Now, I don't have any McKesson. I bought some McKesson and I was stopped out. But for a longer term, for a medium term play, say about a 6-month play, we're sort of hoping that we're going to continue on this trend. Okay, that's what I mean by trend trading. The reason we don't want to buy Twilio is because the trend is down. The same is true, unfortunately, with NVIDIA, even though I did buy NVIDIA, hoping that there's this little upward motion. Now, I'm going to be setting my stop loss very, very tight on NVIDIA because I kind of do expect for it to move down. This is not a bottom. This is a reversal. So I'm hoping that we're at about 95 here, and it's going to start to reverse over about 100 there. But really, the best place to be is probably in McKesson. And the reason it is because the trend on McKesson is generally up. So let's look at McKesson, MCK. And this is one I don't have, but I'm probably going to buy if there's some weakness. Why? Because the trend on McKesson. Now, right now, McKesson is trading right at the 50-day moving average. Now, there is a consolidation on it, so if hopefully it moves above 338. Now, currently it's at 327. Pretty expensive stock, but I do think it's getting support here at the 21-day line, more than likely to go higher, and the overall trend of this is very, very good. Now, I'm going to show you, I'm going to take off some of these tools here, and I'm going to show you, right now I wouldn't buy it because the relative strength line is pointed downwards, but the general trend is up. So I'm going to wait for reversal on McKesson, and then I'm probably a buyer of McKesson because I do think that it's going to perform much better. So with a long time short, you don't want to buy your Twilios. Why? Because that's in a downward trend, of course. You want to possibly look at buying. You want to possibly look at buying a McKesson, and there we go. This is McKesson here again, and then if we were to put in Twilio, TWLO, this is one of the worst groups. you can see. So the chances if I buy this, it's going to go lower, Twilio, and the chances if I buy this, McKesson, it's going to go higher. And this is based on a year's worth of analysis. Well, it's just really not analysis. It's just really the chart. I guess that's considered analysis. I know, Nancy. That's part of the reason I bought McKesson. That's part of the reason I have a small position in NVIDIA. Yeah. So we'll see what happens. Yeah, I know. Yeah, great. I know. Ahead of a vote on chip manufacturing. I know. It's so corrupt. It's just so corrupt. Yeah. But what can you do? 2 days ago, it's up 6%. Yeah. Well, here's the thing. I think once that bill is passed, sell. But I'm in it probably until that happens. So yeah, that's true. Let's look at TMO. We're going to look at. Oh, hey, this is a good question. Let's look at TA first. Let's kind of rank these together because I think that's a really good idea. Travel centers. This is actually one I like, even though it's in a downward trend. These are truck stops. So thank Omar for that. I appreciate it. That's a good one. I like truck stops because people have to get stuff and they have to go to truck. They have to use trucks to get them. So that is indeed a good idea. Let's look at TMO. That's I think what is TMO? TMO is Thermo Fisher. Well, they're both good. Now, Thermo Fisher I really like. Thermo Fisher is one of the all-time great stocks. And this is comparing both of them. So, interestingly enough, if you invested $100 a year ago with TMO, you would have made about 10%, which is very, very good. That's Thermo Fisher. But you would have made more actually with the truck stops, 135. So this is looking very, very good. Definitely like that. So I probably would go with Travel Centers of Travel Centers of America. Now let's see if we can find a good buy point for this. So I'm going to go in here and I'm going to look to see how it's stacking up against those moving averages. We typically don't want to buy more than about 5% out of one of these averages. Now, unfortunately, everything here, the 10-day, the 21-day, and the 50-day, these are all extended. You see how there's more than 5% off of these lines? So this is not a good place to buy it here, unfortunately. Now, off the 200-day line, well, that's kind of where we're looking. I really don't like to buy anything that's below this 200-day line. So I'm going to kind of take a look-see attitude and see if it can move a little bit higher before I want to buy it. Here's what I'm talking about. If you draw a line here, this is sort of a reversal line. It has been moving lower, but as of late, I'm going to set the reversal. So this is the trend prior to the last really 2 weeks. This is the last 2 weeks. So Travel Centers has moved and it's starting to reverse. Not a bad place to buy it. But I want to see a little bit more strength before I do. Now, I'm starting to really like this relative strength line. It has been coming down, but all of a sudden in the last 2 weeks, it's starting to make its move up. So this is probably a good place to get it. Let's take a look at some of the fundamentals on it. The sales are excellent in this Travel Centers. Why? Well, one of the major reasons why is because diesel is so darn expensive. That's why. So I like that. Not from the trucker's standpoint, but from the buying the stock standpoint, I do. The profits are going up very, very nicely, and this is a good company. Not a lot of coverage in terms of the funds. There's only 287 funds in it. Would I buy it here? I would probably wait on this one until it got closer to the 200-day moving average. So, but where I think would be a good place to get into this would be right as it crosses above that 200, above the 200-day moving average, and that's at about 43.70. So that's where I would be looking to get in to TA. I think of these two, TA is the better one. So limit order for TA at and I'm going to say about 43.50. That's kind of where I get interested in this one, because it will move above that critical. It moves above that critical line there, the 200-day moving average. I really want to buy something above that 200-day moving average. Everything is starting to line up for this. It's not ready to go yet. We've got earnings in 11 days. You probably want to wait until you get through earnings on this one, but I think this is setting up nicely. So very, very nice one there. I'm going to put that down on my list. TA, I think that's definitely something that is definitely worth looking at. That's a good one. But I think it's going to be stronger than Thermo Fisher Scientific Travel Centers. I think it's Travel Centers of America. So very good. All right, Qualcomm. This is one of my old favorites. Qualcomm, great company in the chip area, is starting to show some strength, and this is reason that the QQQs have been moving up so much, is because of this action on the stocks like this. This is a quality stock, and this essentially is bottom fishers that are coming into this. This is still not really the greatest time necessarily to buy it. Now, if the semiconductor bill passes, it might be, but it's still looking strong. It's starting to be buyable because it's starting to come above that 200-day moving average. I'm looking at the weekly chart here, and the reason I'm doing that is because it has everything on one page. Sales have been excellent. As you can see, they've been moving up, and profits are moving up too. So this is a quality company. The biggest problem, of course, has been in the semiconductor fabless area, which has not been performing as well. This is where the big pullback has happened since the first of the year. Now, are we getting a reversal on that? We might be, and that might be a good place, and I agree with you on this one. I'm going to the daily chart here. We're finally above that 200-day moving average. Now, I would wait and see if this can hold the 200-day moving average. The problem with buying it here, and I'm always giving you these problems, is the fact that it could collapse because it's essentially extended. It's essentially extended, but let's see if it can hold above this line. I think this one's definitely watch list material. 93 relative strength, very strong, and we're looking to break this downward trend. So I'm going to draw the trend line here, and this is the trend line. As you can see, this is where we have broken above the trend line, and I'm going to put that in there to show you this is the trend line. We've moved from a downward trend to an upward trend. The biggest question is I want to see it move possibly to about 155, 160. We're right in there, and see if it can hold it, and then we might have a good buy here. But I think we're going to get the next 2 or 3 days. I think we're going to get a pullback. You should watch this one because I do think that it may be reversing. So I wouldn't buy now. So I would watch list for now, because I do think we're going to get a little bit of a downward trend tomorrow, and that's my guess. So I wouldn't want to buy this one and hold it over the weekend. I just wouldn't want to do it. But this one, watch list this one. If it can hold above that 200-day line, I think we may have a winner there. Winner, winner, chicken dinner. Okay, last one, TGT. Thank you, everybody. I've got a meeting here in a few minutes. Now, the TGT is a ETF that moves against the bond rate. So interestingly enough, when interest rates go up, bond prices go down. Now this one is an inverse. Oh, I'm sorry. I was talking about TBT. This is Target. Would I buy Target here? No. And the reason I wouldn't buy Target is because Target is not doing as well as some of the other retailers. It's starting to make its move, but it only has a 15 relative strength. Instead of looking at Target, you might want to look at Ollie's Bargain Outlet, OLLI. The reason is because they're getting a lot of the overstocks from Target and Kohl's and those people, and they're selling them at a discount. So that may be a better bet. This is Ollie's. It looks like it might be buyable as it reverses off the 21-day line. This is probably a better one than if you're going to be in the discount space. I have a position, of course, in Dollar Tree, and that was looking great until today, and then not so much. We we took a swan dive. We moved up very, very nicely, very, very nicely, and then we took a swan dive all the way down to the 21-day line. Fortunately, it didn't trip my my stop losses, but it wasn't looking good. I think we're going to get a little bit of a bounce, and we did. We got a little bit of a bounce up to 171 or so. I still think this one's very strong, but again, it's volatile. it's volatile to say the least. All right. Well, thank you, everybody. Thank you so very, very much for watching the little show. If you're not already a member of Dallas Trading Floor and you want to get on the list, it's super easy to do. Of course, all you do is you just go to www.Dallas Trading Floor. And also, it really helps me, and I keep doing this all the time, but you got to hear the spiel. If you like the show, please like the show. It doesn't take you a minute. And subscribe, even if you do. Even if you don't like it, please subscribe to it, but definitely like the show. Really appreciate that. All right. I will be back tomorrow at 5. Thank you so much, everybody, for taking